Good afternoon, ladies and gentlemen. It's nice to see everyone here. It's refreshing to see people because this is our first GMM and we're doing it hybrid. So some people are joining us online. They are present virtually in Zoom to help us navigate through the continuous challenges brought by the pandemic and global market forces. So let's begin today's program with the Philippine National Anthem. So please, everyone, can you please stand for the Philippine National Anthem? Please remain standing for the invocation. In the name of the Father, the Son, the Holy Spirit. Amen. Heavenly Father, we praise and glorify your name as we all gather here in the harbor of your safety. We come to you in gratitude for bestowing us this opportunity to bring everyone together in this hybrid event. Shower your blessings on the community gathered here in your name. We pray for wisdom to share and bring forth new ideas for the betterment and recovery of our community and country so that we may be a blessing to many. May this be a meaningful gathering for all of us here, and may you continue to guide us in the days ahead to make this the most fruitful year for everyone. Lead us all in the work. Lead us all work to do the work that we do so that we all may reap the benefits of our collective wisdom and experience. All this we ask in Jesus' name, amen. In the name of the Father, the Son, the Holy Spirit, amen. So please take your seats. For those who are virtually present, I know you're already on your seats. So again, ladies and gentlemen, welcome to the first GMM of SharePHIL for this year. I am Maya Besnar. I'm the chair of the Programs Committee of SharePHIL. And now to formally open today's program, may we now call on our dear President, Mr. Jimmy Ismael, for his opening remarks. Warm round of applause, please.
Thank you, Mai. And good afternoon, everyone. Welcome to our first hybrid GMM. It's been a while since we actually saw each other live in a gathering like this. We went through a lot during the pandemic, but we feel that now is the time to start opening up, and hence the board decided to hold this hybrid setup today. And we're privileged to have with us today a very well-known investment advisor, of course, who will share with us his thoughts on the market, given the volatility that is happening, not just locally, but internationally. So we look forward to that later for his insights. SharePHIL continues to be active despite the pandemic, although we did a lot of virtual events the past year, primarily focusing on how to recover from the challenges of the pandemic. This year, we also decided to contribute in terms of ensuring that the voters actually vote wisely, and at the same time ensure that the election process will actually be done properly by having two summits this year that focus on the elections. But SharePHIL continues with its advocacy of effectively protecting the interests of the minority shareholders. So even with the virtual setup in the stockholders meetings, we still attend virtually. And this year is no exception. We actually commissioned or partnered with the schools, no? With some schools for students to actually observe the conduct of stockholders meetings and then come up with a report that hopefully we can draw insights from and effectively share, no, with not just the companies themselves, but even the SEC to the extent that we need some, or PSC to the extent that we need some adjustments. No, but definitely that advocacy is still there and continues. And we also have lined up a couple of things. This GMM is one of them, but we will also have an investor relations summit that is being put together. And this is the first time as well that we are organizing one. We believe that SharePHIL, as part of its advocacy, is well positioned to actually ensure that the practice of investor relations is kept to a high level. That's why we intend to come up with a summit that addresses the needs of investor relations practitioners, and hopefully even create a group, you know, for them to actually effectively come together, hopefully through SharePHIL. You know? And then we also intend to, given that we have broadened our scope about a couple of years ago, to actually include, well, ensure that we actually engage, empower, and enable our shareholders to actually make the wise investment decisions. We are also coming up with a program, an investor education program through our education committee that is ladderized, effectively addressing the needs of investors at different stages of sophistication. So we're excited to actually eventually launch that. It's being worked on by the education committee right now, and we have quite a few institutions as well, like-minded institutions who are also very much committed to that, and like Phoenix and CIBI Foundation, who have actually pledged their support in terms of funding that initiative. So those are the things that are being planned right now. Of course, we continue to co-sign letters or statements on issues affecting the capital markets in general as part of our advocacy, and so those things will continue. But without your support, we cannot do that. That's why today we are also privileged to be inducting our new set of members who will join our ranks and hopefully help us achieve our vision by enrolling or by being active in the committees that we have formed. So again, I would like to welcome everyone to our first hybrid GMM, and look forward to holding more of this moving forward. And so please sit back and relax as we hear from our guest speaker later on. And again, welcome in advance to the SharePHIL members who will be inducted today. Thank you.
Thank you very much, Jimmy. So as what Jimmy has mentioned, we will be inducting new members today. And this is the first time after the pandemic. Well, before the pandemic, we had the induction face-to-face. So this is our first time they'll be having it face-to-face. So ladies and gentlemen, may I have to call on Mr. Herbert Kunsunhi, CFO of the MCI Holdings and the head of SharePHIL's membership committee, to welcome and call the inductees for this afternoon. Herbert.
Salamat na. Yeah. Mr. President and members of the board, I'd like to invite our new inductees today. We have 8 persons, 1 in person, and and 4 via the virtual, no? And the 2 have signed already the oath of membership. So may we call Sir, Mr. President for the Outtaking. We have here Dr. Derek Edelbert Yu. No? He's a professor from one of the best university in the Philippines, De La Salle University. Okay. And then we have online is Estelito Biacora, Executive Director and Treasurer of Ayala Corporation. Makikita ba doon? No, there's no picture. Okay. Then the second is Jobel John Lapag, proprietor of Cebu Inertia Commercial Corporation, Construction. Then the third one is Owen Kiefer Ocampo, Investor Relations Director of Convergy. And then the fourth one is Jed Velarde, Head of Partnership of Cole Financial Group. Then the two persons that have signed the oath of membership are Jomi Francisco, President of Wire Group Philippines, and Stephen Tan, President of Vermas Auto Philippines, dealer of Mazda. So, Mr. President, can I?
Oh, yeah. Okay. Again, I would like to lead the oath-taking for all the members who are virtually present as well. Please repeat after me. Please raise your right hand first and repeat after me. I state your name.
Derek Yu,
Having been accepted as a member
having been accepted as a member
of Shareholders Association of the
of
Philippines,
Shareholders Association of the Philippines,
do solemnly swear
do solemnly swear
to abide by and uphold
to abide by and uphold
its articles of incorporation and bylaws,
its articles of incorporations and bylaws,
to commit and put into practice
to commit and to put in practice
its core values and noble tenets of fairness, accountability, independence, transparency, and honor.
to put in practice its core values and noble tenets of fairness, accountability, independence, transparency, and honor.
I pledge to help promote awareness
I pledge to help promote awareness
of shareholder rights
of shareholder rights
through responsible advocacy
through responsible advocacy
and shareholder education.
and shareholder education.
And in so doing,
And in so doing,
contribute to the building of investors' confidence
contribute to the building of investors' confidence
and contribute to the development of the capital
and
markets.
contribute to the development of the capital market.
This I pledge
This I pledge
without mental reservation or purpose of evasion.
without mental reservation or purpose of evasion.
So help me God.
So help me God.
Thank you. Congratulations. Welcome to SharePHIL.
Thank you.
Thank you.
Sorry.
Maybe
Trustees and pati yung nandun sa screen for the photo op. Trustees. We have to be used to this kind of thing na meron tayong kasama sa screen. So please, Board of Trustees, lagyan nyo ng space for the screen. Ayan. Ayan. For the members who were just been inducted, can you please turn on your videos? Yan, okay, thank you. Kayo talaga yung star to eh. Okay. Congratulations. Oh, photo. Dito nakatingin. Thank you very much, dear Board of Trustees, and congratulations to the new members of SharePHIL. Congratulations. Congratulations. Congrats. Congratulations also to the membership committee for having for recruiting so many, sabi nga ni Attorney Cherry. Okay, so now this is the exciting part of the program. Sabi nga. Ay, wala. Okay, so we will start our fireside discussion in 5 minutes. So for those who are with us online, we'll get back in 5 minutes. Thank you. Oh, picture daw. Sandali. Ang MC muna magpapapicture.
Alright, I hear this, smile. Thank you.
Okay, thank you, ladies and gentlemen. We will now go to our discussion. Okay. I will introduce our guest speaker, a former financial analyst. Our speaker spent the year part of his career doing equity research, sales, and trading for several firms in London before joining Deutsche Bank as the head of the Asian equities desk. In 2000, he returned to his native Manila to establish Deutsche Regis Partners, a joint venture with Deutsche Bank, which went on to become the largest stockbroker in the Philippines. In 2010, he retired from the sales side and set up the Campden Hill Group, a family partnership to oversee his investments, including that in Deutsche Regis Partners. In addition to investing, our speaker also sits on several publicly listed companies in the Philippines: ABS-CBN, Ayala Corp, the Bank of the Philippine Islands, DMCI Holdings, Philippine 7 Corporation, and the Maxis Group, the country's largest casual dining restaurant company. Additionally, he is a director of a Singapore-run Albizia Asian Tengara Fund, and the Straits Wine Company, Southeast Asia's leading wine exporter. Under former President of the Philippines, Benigno Aquino III, he also served on 3 government boards, the Development Bank of the Philippines, the DBP Leasing Corp, and the Metro Rail Transport Corporation. On the nonprofit side, he is a trustee of the Lyceum of the Philippines University, a member of the Finance Committee of the Ateneo de Manila University and the Philippine Jesuit Provincial, and he serves on the Dean's Global Advisory Council at Darden. He earned a bachelor's degree in economics from Ateneo de Manila University, a master's in economics from Oxford University, and an MBA from University of Virginia, Darden School of Business. Today, he keeps himself busy as the chairman and president of AB Capital Investment Corporation and as chairman and managing director of Campden Hill Group. In his spare time, he plays guitar. We'll see kung may dala po siyang gitara ngayon. He plays guitar in a rock band with some old friends. Kaya lang with some old friends daw. Walang young friends. Ladies and gentlemen, let's see how exciting will this be from the rock star. Please welcome, ladies and gentlemen, Mr. Anton Periquet. Joining him. So today's format will be a Q&A fireside chat. So joining him is the SharePHIL's trustee and BDO Capital's president, who is just, recovering from his muscle aches because of the recently concluded 42-kilometer marathon. Ladies and gentlemen, Mr. Ed Francisco.
Hello, good afternoon, everybody. Thank you. This is a fireside chat, so I will pass the floor to Anton, but we're honored to have him here. So maybe Anton, to make it very informal, I'll just ask some questions if you don't mind, and then just feel free to answer and share your thoughts. Many topics, but we'll try to keep this within 30 minutes so that we can finish by 2. Anton, maybe you can start by sharing your investment philosophy. Basically because of all your experiences. How do you look at investments? How do you look at stocks? Are you into the chismes? Are you more a fundamental? What are your requirements? What's your horizon? What models you look at? Para lang at least the most of the 100 or so watching will understand or learn new ideas from you, Anton.
Okay, thank you, Ed. First of all, there are many ways to skin a cat. There are many ways to make money. Some people have a knack for trading. I don't. Some people have a knack for timing markets. I sometimes do. I sometimes don't. So the way I invest is the old-fashioned way. I buy stocks like I'm buying a piece of a business, to quote some Warren Buffett, for instance. And when you put it that way, your job really becomes less complex than it appears, because most of us know what is a good business, what is a bad business, what is an average business, and most of us will have a fair idea of what is a fair price. So if you look at it that way, it makes stock market investing less daunting than it would appear looking at numbers, ratios, and all. So that is my investment philosophy. Buy a stock like you are buying a piece of a business and sit on it. And as they say, making money is not in the buying or in the selling, it's in the sitting. Just sitting and waiting for your investment to bear fruit.
But Anton, maybe at least any industries, holding period, I guess the involvement you get into. What are your thoughts there?
I like to start by looking at the industry. First of all, you'd like an industry where there is some growth, but probably even more importantly, an industry where there is some degree of concentration, meaning there is not too much competition so that the game is rational amongst the players. And there is a degree of pricing power and margin protection that these companies enjoy. For instance, in the Philippines, it's easy to fall into the trap of going just for growth. If you look at young entrepreneurs, when they think of going out on their own, they say, let's put up a restaurant because everybody has to eat and the population is growing. But of course, they fail to consider that the restaurant business is one of the most fragmented and therefore highly competitive industries. And therefore, the success rate in restaurants is actually very low. I think it's less than 2 in 10. For instance, there are businesses, for instance, where the growth is a little more muted, but because the industries are concentrated, for instance, telecoms or TV, you see the returns are very high. So I like to look at not just growth, but industry concentration. How much competition is there? And how much can the competition turn irrational, like it typically does when industries are fragmented? If I can give another example, a lot of players got into call centers 20 years ago because they thought that was the fastest growing industry of tomorrow. I actually know very few who made money in it because it's a global industry, highly competitive, very few barriers to entry. So it failed the second test, if you like, the concentration ratio test. A holding period, I find that you make more, when you look back, you find, well, I've been around for a while. When I look back, I find I made the greatest returns on stocks I have held, not for 3-5 years where you make maybe 50%, 100%, but you actually make the most money on things you bought maybe 20 years ago and just forgot about.
Really?
And just
was
weathered
that,
the crisis.
The intention was to hold it that long, or
I would like to say yes, but sometimes it was accidental. No? The stock was illiquid. You couldn't get out during the financial crisis. And then you found even if they've halved, they rallied even further. I'll give you an interesting anecdote. You know, the legendary investor, Peter Lynch, who ran the Fidelity Magellan Fund in the 80s. He, for 13 years, delivered a compound annual return of 29%. Yeah, very hard return to beat. He ran a mutual fund called the Magellan Fund. And yet, it is a fact that 2/3 of all investors who bought into that fund lost money.
So how is that? Yeah. Okay.
Because they were going in and out. Okay, the fund over 13 years halved in value twice. And so there was a lot of volatility. If you tried to time it like 2/3 did, you would have not enjoyed the benefit. Whereas if you just sat for the 13 years that he ran the fund, you would have made your 29% a year compound.
Okay.
So that is one of the little known secrets to investing, that the money is made not in the buying or in the selling, but in the sitting.
So effectively, Anton, you're not really there as a day trader. You're really there for the long term. No?
No, like I said, though, there are many ways to skin a cat. There are books about great traders who have the knack for it. George Soros, for instance, is a speculator more than he's an investor, and he does fantastic trades. So if you have that skill, then by all means. No? But that's why the first rule in investing, they say, is to know yourself. What are you? What kind of animal are you? Some of us have the makeup of great investors. Some of us have the makeup of great traders. I mean, can you act on instinct? Or do you sometimes fall victim of analysis paralysis? Or are you more thoughtful? So it's knowing yourself first. Are you an investor or are you a trader? And then you devise your investment process as such.
Okay, thank you, Anton. Yeah, maybe regarding investment, one of the, I guess, questions sent by the audience also is, in your investments, are there red flags to watch out for? I guess in terms of corporate malfeasance or missteps, especially because you've been on the boards and of many companies.
Okay, I'm thankful you didn't say red flags in terms of when to sell a stock, even if the company is good. But I'll tell you, I was talking to a colleague a couple of days ago, and I said typically this is half in jest when a company buys a basketball team, or when the president starts cutting ribbons and winning awards or appearing in the front page of a cover page of Tatler. Those are typically flags. Converge just bought a basketball team.
Alaska, right?
Anyway, I do think Converge looks interesting today, by the way. It has growth and it's no longer expensive. No, the flags in terms of malfeasance or minority shareholder abuse, typically that frequently occurs in the related party transactions front. That's why the related party transactions committee of the board is a very important committee. And it's something the regulators should watch, really. It's when the major shareholder sells an asset that he owns to the company at an inflated price, or buys an asset from the company at a very low price. So that is the most common form of abuse against minority shareholders that you will find. A less common one, but it is also practiced, is issuing shares to themselves at a price way below market. For instance, sometimes a company will go public, sell the public shares at 3 pesos, but hidden somewhere in the prospectus, they are issuing shares to themselves at a fraction of that. It's something regulators, I feel, should stand up more vocally against.
Yeah, at least if it were a stock rights where everybody has a chance to come in, that's okay. But if it's just to a select group,
yes.
Okay, Anton. But then in that case, the RPT usually anyway, that's always headed by an independent board member, right? So you usually handle the RPT.
Yes, that's true. I mean, there has been progress definitely in recent years. Boards taking these committees seriously, minority shareholders being much more vigilant, and I think that's an advocacy your organization has. It's a good advocacy, and you should persist.
Yes. No, in fact, thanks for bringing that up, Anton. Because we are SharePHIL, as Jimmy mentioned, is a signatory to the local business communities covenant on shared prosperity. So what I guess, could you share us also your views on stakeholder centricity, and I guess how ESG is affecting your views?
Okay, to my mind, the conflict between shareholder capitalism and stakeholder capitalism is exaggerated. In fact, in the long run, I believe it does not exist. Because for a company to make money in a sustainable way, it has to take care of its stakeholders. You cannot, for instance, make money and destroy the community around you, or pollute the community around you, or violate rights of the community, or disregard the environment. To make money in a sustainable fashion for your shareholders, you've got to be a good corporate citizen anyway. So to my mind, it has always been a given that in the long run, maximizing shareholder value means you've got to take care of stakeholders too. Now, in the short run, it is a question, maybe there is a conflict in the short run, but I think it is a question of knowing what is your objective and what is your constraint. To my mind, if I'm running a public company, my objective is to maximize shareholder value, subject to the constraint of keeping my stakeholders whole. And I find that managers get confused when they try to serve both masters, when they mistake both of them as objectives. If you are a social enterprise, for instance, it's the other way around. You are there to maximize your stakeholders' value, subject to the constraint of having to make a profit so that your model is sustainable. But if you are a profit-making company that is responsible for delivering returns to pension fund holders who take care of widows and orphans. Your objective is to maximize shareholder returns, subject to the constraint of taking care of your stakeholders. That is the way I see it. So
Thanks. Yeah. That's very critical. I guess audience, you have to remember that, or in fact, once you watch the replays of that, think about that, because that's key, and that that makes the emphasis a little different. Yeah, in fact, Anton, maybe can you share with us some of the challenges or some stories without naming them, but at least because you were involved in some family corporations or some of the boards where a family member was very influential, and how that affected the minorities. How was the governance then? Was it different from the very traditional or the more diverse public corporations, or when it's family run? Because if it's the same stakeholders anyway, do they run it the same way, Anton?
Okay, I'm not sure, Ed. Can we be a little more specific? Give me an example.
Okay. Now, maybe for example, of course, you talked about RPT already, so that hopefully ensures that it's very fair. But because sometimes if in the Philippines, right, a lot of our corporations are still majority owned by families. Is it run differently, more differently than if it were in a Western company? And does that cause problems with allocation or meritocracy or the way they choose their leaders?
Yeah, it can be run very differently for good or for bad. No, it's not just in the Philippines, but actually in most of Asia, where families do have controlling stakes in publicly listed companies. If we were in the West, for instance, like the US, a shareholding of 20% will probably make you the largest shareholder in a company. Here, it's not uncommon to find single families owning 51 or even 70% of companies. And it has a bearing on how companies are typically run. My observation is if the family is first generation, typically you want to bet on it. It's their baby. They will work much harder than professional managers. If they are second generation, you're not sure. Right? They could be there just because they're sons and daughters of the family. So you have to pay closer attention to that. No?
Okay.
But I've been a convert to owner-managed companies, which I was not when I came out of business school, because my impression of the family companies, my lolo's company, where it was my uncles and aunts who ran it to the ground, essentially. But again, like I said, I've been a convert. Looking at some of the best managed companies in Asia, they are actually family run. It's important though that they are policed, and I think they know it. They need outside shareholders and outside directors to keep them honest. So to use the expression, not literally. There is also a difference, I think, in the way they choose their directors when the company is family controlled and when it is not. For instance, in Asia, where you can never outvote management anyway because they're controlled by families, they choose directors. They look at directors as resource people. What can this person bring to us? What can he add? Let's choose an ex-chief justice, for instance, because that can help me with the courts or understand. Yes. Or let's choose an ex-general because I need a connection to the military, or an ex-politician. That's the way Asians like to choose their directors. In the States, it's very different. Board members are not seen as resource people who can add things to the business, but more for real governance. Who are the people there who can stand up to the managers, who can be real checks and balance against the managers? In Asia, it could be the opposite. If you're too independent, you could be seen as a nuisance.
Yes.
Right.
You have to be beholden to the.
Families typically like directors who are supportive. To use the expression. It's totally the opposite in the States.
Okay. But then, Anton, it's interesting. You said so. You said first gen, of course, that's their baby, so they really want to make sure it does well. Second gen, you were being careful. What about third gen? Have you been on third gen? Because sometimes there's this saying that they lose it on the third generation, right?
I've seen even 8th generation, and they're pretty good, Ed.
Very good, very good.
There are no rules, I think, beyond 2. But clearly, when you started the company, you look at the Chinese, for instance, the Seas, the Gokongweis, or even Lushoko. They built that business from scratch. They know the prices of everything there on their shelves. They know how to manage the inventory. They personally know their suppliers, even their customers. So these are businesses that are typically some of the best run businesses operationally. And you just have to teach them the discipline of capital allocation and capital management. And then you will have the perfect shareholder value creating machine.
But then, Anton, yes, talking about capital allocation, is that something that the board should teach, or is that something that their CFO should develop and then espouse? Yeah.
No, typically the expertise and know-how is with management. The wisdom is with the board. That is typically the division of responsibility. So something technical would be the CFO's responsibility. But I would have thought it is not outside the board's purview to say, as shareholders, we demand a minimum return on our equity, on our investment of, say, 15. Cost of equity changes depending on where you are in the business cycle. Now I hear the cost of equity is at least 12, maybe 13. When money was free, it was as low as 9 for the Philippines. Now it's 12, 13 and rising. So if your firm is not generating a return on equity of 12, 13%, it is destroying shareholder value. If it is delivering 15, 17, 18, then that's fantastic. Keep the shares.
And when you measure return on equity, just for at least the audience, is it return on equity on a book value or on based on market cap that you calculate?
They address different questions. If you pay too high a price to book ratio, then it's not relevant to you what the return on the book is.
Yes.
But return on book equity does tell you how efficient the firm is in returning capital, its business model in returning capital, churning out cash from its operations.
Thanks, Anton. But in nowadays, do you still invest in possible startups where at least the early years, they really are expected to make losses? Is this still an acceptable investment?
Only when I'm running it.
Because you trust what's happening. Okay.
I'm not comfortable with venture capital personally. I'm conservative. I'd like to see proof of concept first. I'd rather pay for something I know works.
Understand.
And just waiting for the right time to buy it, such as during a bear market when stocks go on sale, then something from scratch where I know the returns are greater, but so is the risk, and I'm just less comfortable with that.
Right. Thanks, Anton. At least I respect that, because at least it depends also on your investment philosophy. So not one is wrong, but at least in Anton's case and even in my case, we generally deal with the companies that are operating and have strong cash flows already. So there's the story. But the angel investors, the VCs are the ones that I guess you get rewarded with more risk, but you have also more volatility there. Anton, I'll shift a little bit because some people were asking about other asset classes. Can I get your thoughts on crypto? What do you think? Is it, of course, now Bitcoin, I think, is down to less than 20 or around 20 from high of 67 or something. But do you still think it's a good investment and a hedge against inflation? And
I don't know that it's a good investment. My gut feel is not yet. But you cannot value crypto because it has no intrinsic value. Okay, even gold has intrinsic value because there are uses for gold. With crypto, it's like a currency. a medium of exchange. I mean, there is no intrinsic value in the peso, for instance, or even the dollar, other than that they are mediums of exchange. So crypto without intrinsic value can only have a certain value if it starts to get accepted as a medium of exchange. I would think there is a positive value because it will have some use for, at the minimum, the money launderers or the people who want to hide their wealth.
Yeah, that was the.
So there is at least a minimum value there. I'm just not sure if it is $20,000 per unit. No, I have a feeling it isn't, because the market cap of crypto, when they quote it, still seems too large.
Yeah, I think it's around less. Although at one point it was $3 trillion. It's probably now less than 2 trillion already.
I think it's 800 billion, no? Which
So
I think
less
is still sounds large for what you can do with it on its own.
Interesting. Okay. Anyway, I think we have 5-10 minutes left. Let me ask some of the questions from the many members who sent in their questions, Anton. And I apologize. I will not. I'll not introduce the person who mentioned the questions. So I'll just group them. Maybe the first questions are related. Anton, what do you think of? Where do you think the Philippine capital markets are going? Where the PSE is going? And is there going to be a recession there?
Okay, first of all, I don't think there will be a recession. You notice we've only had one recession since 1998. The US has had 2 or 3. And the reason is because the average American citizen has a very high level of income and therefore a lot of discretionary spending. So during hard times, he has something to cut back on. Then growth can turn negative. For a lower income country like the Philippines, there is very little discretionary spending. The average spend of the average consumer is essentials. There's nothing to cut back. Even if he's having a hard time, he has to borrow to feed his family. He can't cut back. So that's why, given our population grows by under 2%, 1.6% a year, we will continue growing despite the hard times. So we will not, answer to your question first, we will not fall into recession, although the odds are the US might.
Okay.
What will happen to the capital markets? I guess first, the currency, we're already seeing the peso weaken. It will likely continue to weaken, because if the Fed is raising interest rates at 75 basis points at a time, and we only raise by 25 basis points at a time, then the flow of money will naturally be towards the dollar. I think the interest rate differential now between peso instruments and dollar instruments is almost nothing. And in that case, most people would rather hold dollars, no?
Yes.
If you look at high quality bonds. Yes. So that's the first thing. The peso will continue. The dollar will continue to appreciate against the peso.
Mm-hmm.
The second round effect of that is that peso interest rates will have to rise, because companies who will have to borrow will have to offer you more to convince you to buy their bonds instead of the dollar bonds. So local interest rates will have to rise. And with that, you have pressure on share prices, as peso fixed income, which has been unattractive for a very, very long time, suddenly becomes less unattractive. I think they're still unattractive now, no, because your inflation is 5%. And I still see bonds being issued 3 years at 3%, 2.9%. So they will have to rise further to compensate you to park your money there. I think the Globe preferred, let's see, the Globe perpetual bond offers a yield now of close to 6% in dollars, and it's callable in 3 years. So what would you rather buy?
That's true. Yeah, and at least a good thing though, at least some of the corporates are listening. So you're able to get, now we're pricing 5 and 7 year peso bonds at around 7-8% already. So that's out there. Of course, the question is, do you already buy at 7 or 8, or do you wait for the interest rates to go up further, and then they'll be repriced higher. So, but we'll see. But yeah, but they're listening to Anton, so the yields are going up. Anton, what about I guess the industries? Where do you think the PSE will be headed at, and what stocks or what industries would you recommend for our members? Philippines, at least. Philippines.
I'm not sure we've bottomed here. Also, we've had one down leg in response to rising interest rates. That means a reduction really in the price people are willing to pay for a given number of earnings, given level of earnings. So the first down leg was valuation driven. Typically, you will have a second down leg, which is earnings driven, when earnings estimates are revised down, precisely because of the changing conditions. And then you will have a period, I guess, where you dwell at the bottom. We don't know for how long. Like I said, market timing is a tricky thing. But if you look at the last real bear market we had the collapse in '98. And it wasn't until 2003 that the market started rising again. So that was a long time. I do not think this time around will last as long because there's been no real damage to the economy so far of the magnitude of the Asian crisis. The excesses are not the same, and corporates are not as indebted and as exposed as they were in 1998. But so if I had to guess, I would say 12 to 18 months, we bump along the bottom. That doesn't mean though that you can't make money, because a flat market doesn't mean that all stocks are flat. It means some are going up and others are going down. And it's just a question of hoping you are in the right ones that go up.
Maybe my last section will be just asking your views, especially you've been very, I guess, advising many boards. What is your view without being, and it's not a political statement, but with this new administration and the appointees so far, how optimistic are you with the Philippines?
Honestly, I'm, well, you know, I like to say, if you look at all the administrations we've had since Cory Aquino's time, first year is always a honeymoon period. You know, whether it was Cory or Ramos or Estrada, Arroyo, Duterte, Aquino, Duterte, the first year is always honeymoon. Because every newly elected president in his first year will talk the talk. It's only after the first year do you see whether they walk the talk.
Interesting.
So really in the first year, it's wait and see. So to answer your question, I know the appointments so far to the cabinet have been on the encouraging side, but really we're all wait and see. We don't know.
Okay, we'll just be hopeful anyway. Siguro maybe to I guess just to sum it up, I wanted to ask someone, shift a little bit about our change, maybe because just to share with the audience, Anton and I were classmates and batchmates even since high school, and that's why we've been friends and we've shared many experiences. I don't know if you know. So Anton, how has your investment philosophy changed? Maybe because the fact that, you know, in Maslow we already past the safety and security, we're now in the social actualization and everything. And has it changed because we have children now in the late 20s? Has it changed, and do you think it will change again in the next 5-10 years, so that at least the investor appetites of our audience will change depending on the career stage they are, or whether they're senior citizens or retirees?
It is supposed to, in theory, no, you're supposed to be a little more aggressive in your youth, a little more conservative as you age, and a little more dividend orientated or oriented.
For us now, but as seniors.
I don't think it's changed that much in my case. What has changed is my orientation to what I buy. When I came straight out of business school, like most people, I was a strict value investor. Anything that looks like it is trading below its intrinsic value is a buy. And I have found that that philosophy works more in efficient markets like the US.
Yes.
And not so much in the Philippines, where we are, where there are lots of value traps around. In the States, you don't have value traps because anything that is very undervalued gets raided. And an activist investor will agitate, demand a change of management, demand a change of strategy until that value gap is closed. So buying value in the States works. But in the Philippines, again, where families control majority, you cannot agitate and force change. So you will have stocks that will stay cheap for 20 years or more, if
And
not
they don't
forever.
go up. Yes, and they don't go up, ladies and gentlemen.
So value here is not as effective as value in the States. So I have become a little bit more of a growth-oriented investor in the Philippines, meaning I don't really care what the NAV is or the discount to NAV is. What's happening to the returns every year? Is management delivering returns? That's what I look for.
Okay. Thanks, Anton. Anton, there was a question from the audience. What are your insights on solar energy renewables, and is it a good investment now?
I guess it will vary from company to company. Long run, there is no question that the world is moving in that direction. No? But just as the world was moving just as .com was real, you had a lot of casualties there. With every revolution, there are hundreds and thousands of casualties and very few survivors. It was that way with the train, the railroad, the automobile in the 20s, with electronics in the 60s, .com in the 1999 to 2001, and it's happening here. Not that the revolution is not real, it is real. But everybody is going to jump in there, and only a few are going to deliver the profitability that is required to become an Amazon or an Apple. You know that there were over 1,000 cars manufacturers in the US in the 20s during the automotive revolution. And we know that only 3 survived. And you can probably make that same analogy with the .com era, and same here. So renewable energy, solar is certainly real. It's going to change our lives. It will replace much of the old types of fuel, but choose your companies careful. And you have to be very careful because ESG is it's a big movement. A lot of money was poured into ESG funds over the last 5 years. And you know how it is when you're a fund manager, the moment the money's in, you've got to invest it. So you have a lot of money coming into ESG funds and very few companies that were compliant. So needless to say, a huge amount of new money chasing very few assets bid up the prices of these compliant companies beyond their ability to make a return that would justify the prices. Now you see the process along with a lot of other bubbles. The inflows into ESG are normalizing. In fact, in the last month, they were already negative. At the same time, because of the high valuations, many companies became Me Too companies and made themselves compliant and ESG friendly. Yes. So you have that combination of slower demand and more supply of companies. That just means share prices falling to their correct values. So to answer your question, solar power, ESG, it is real, it will change our lives, but choose your companies carefully. Make sure, just as in the auto era, you are in one of the few survivors in that mania.
Right. So Anton, with I guess that's your segue to me also, because if some industries or stocks are expected to go down, are you a supporter of short selling?
I'm a big supporter of short selling, and I don't know what the PSE has been waiting for. They've been talking about this for years. Short selling has a negative, unjustifiably negative connotation to many of us. And people typically do not like short sellers. But short selling is actually a very productive counterweight in a market's workings. For instance, short selling can be used not for selling down a stock, but for hedging. For instance, when you don't want to take market risk, you just want to bet, for instance, that PLDT will outperform Globe over the long run, or vice versa. You end up buying PLDT and shorting Globe, or vice versa. So regardless of where the market moves, if you're correct, you made your money. So that is what you call a pair trade, and you need to be able to short sell to do that. Now, the other productive contribution of short selling is that they prevent or police market manipulation. You know, market manipulators, they tighten the float of a stock. They release, news that excites the market. The share price rises many times above its fair value, and there's no counterweight to that. If short selling were allowed, the fundamental investor can bet against it and control and limit the extent to which the stock is manipulated upwards. Because remember, it is the helpless public that is victimized by these manipulators. And finally, perhaps the most important purpose of short selling from a regulatory point of view is the short seller is actually the regulator's best friend. Because abroad, fraud and aggressive accounting, false earnings are detected typically by the short sellers, not the regulators. The regulators don't have time nor the incentive. For instance, we have more than 300 listed companies here. But a short seller has the incentive to look for fraud or earnings that are not real. And then he exposes them so that he can make a buck on his investment. And that's actually something a regulator should welcome. And that will help protect the retail investor, the public. So I think it's overdue. Other markets allow it. Thailand allows it, for instance. It'll be good for the brokers also because you increase the volume in the market. It'll be good for liquidity. So it's overdue. It's high time that we allowed short selling in our market.
Oh, thank you, Anton, for that. With that, ladies and gentlemen, I would like to close it. But maybe if there are any question from the audience before I pass the floor back to our president. If none, maybe may I now ask our president, Mr. Jimmy Ismail, to give our token of our appreciation to Mr. Anton Periquet. We thank you for his time, and I'll ask our president to give some parting words.
Thank you.
Just a few words again. I would like to thank on behalf of the board of directors or trustees and members, our guest speaker today, Anton Periquet, and of course our host, very effective host in the person of Ed Francisco. So again, thank you all for attending our first virtual or hybrid GMM, and look forward to seeing you all, more of you, in the coming sessions that we will have. Thank you all for attending this afternoon's event. So thank you, and I think we will have a picture take.
Maybe ask the rest of the board to join. Maybe. Yeah, or the board.
Yeah, maybe all
the other attendees.
All the attendees. No, we have a group picture. Let's have a group picture.
With a rock star.
Yes. We'll appreciate it.
Sabihin ko sana, i-take away ko doon. Magkaklase pala kayo na high.
It shows our age.
I think Ed is older by 3 weeks.
11.
Forward na lang po.
Mga part 2 rows. Joy, partner. Mine, ito na. Okay.
May age daw yung pera.
Yan.
May age. 32 tayo. May age daw. Yung mga bata-bata.
Itong dalawa, parehong car aficionado.
Sorry. Okay lang po, Maso. Thank you. I hear, please, smile everyone. One more.
Thank you.
Thank you. Ed. Good job.
Thank you for yes, sir.